Now, for more on how the ECB decision may affect the currency market, we'll go now to our markets desk and John Ehrlichman. And John, it'll definitely be worth watching the euro-dollar pair.
Yeah, absolutely, Scarlett. We have seen the euro strengthening against the dollar this morning, but certainly when you take those Geithner comments and couple them with the expectations from the ECB today, you're left with this idea that the economies of the U.S. and Europe are still not out of the woods. Not an overwhelmingly convincing argument for buying stocks right now, but perhaps so more convincing to buy the dollar. And that's why Todd Gordon, a strategist at Gain Capital, has been bearish on the euro's prospects against the dollar. As for what might happen in reaction to what we hear from the ECB, if you do see some weakness in the euro, he's watching the 142 level because that's been a key resistance level so far this week.
Okay, we'll watch for that. Meanwhile, John, Treasury is snapping a 4-day advance. We were showing our viewers earlier, but apparently the street is still pretty skeptical of that.
It's very interesting, Scarlett. Obviously, we've got a jobs report tomorrow. If you go back to the last jobs report, the yield on the 10-year was at 3.85%. Well, we've now seen that yield get down to around 3.3%. And we spoke to a number of Treasury traders, Bill O'Donnell of RBS, no exception, who are skeptical when it comes to the economy overall, this idea of a sugar high, if you will, created by stimulus. And then when it comes to the 10-year as well, looking at the value there versus comparable debt in Japan, in the UK, and of course that massive run-up that we've seen in high yield performance here as well. And there is this argument that getting down to 3% on that yield is not such a dramatic idea at this point. Back to you.
Okay, how times have changed. Thanks very much, John Ehrlichman at the markets desk.